Welcome to episode 3 of Hot Markets. Today, we'll be discussing what I believe is the most fundamentally misunderstood company in the world and why it makes up a majority of my portfolio. Looking at the charts, Tesla is up 156.43% year to date and 13.35% from this time last year to arrive at a market cap of $880.5 billion. Before we begin discussing Tesla stock, I must explain that retail investors like myself and you can capture opportunities in the stock market when Wall Street and corporate investors make miscalculations or completely misunderstand a company. This is because public stock prices are mostly controlled by institutional investors, meaning that when they have something wrong, we can pounce, and Tesla stock is something that they've got completely wrong because they're analyzing it as a car company rather than a software company, an AI company, an energy company, and a car company. You have to have all four in your valuation. Just for a quick example before we get onto the money. Even among bulls in the mainstream media, all eyes are on vehicle profit margins in the Q2 2023 earnings report, when this will have little to no fundamental impact on the company in the long run. So, while yes, this could be the most influential factor in the movement of the stock price a week or two after the earnings call, it will not have an impact on my long-term Tesla price target nearly as much as the energy business will, which is why that is what I'll be hyper-focusing on in the Q2 2023 earnings report. Now let's get on to the money. Tesla is trading at a premium price-to-earnings ratio of 73.74. which on the surface seems ridiculous, but when you start to look at Tesla's economics, it begins to make more sense. Let's begin with Tesla's largest business, their vehicle business. I know, Wall Street knows, retail investors know, and basically everybody with eyes and ears, which isn't very many people these days, know that Tesla is going to grow their business at a compound annual growth rate at around 50% year over year, which is their current stated goal, and they've achieved it for the last 2 years. They'll be able to continue to achieve this goal because of Cybertruck, the Tesla Model 3 refresh, and the next-gen Tesla. While the compound annual growth rate of 50% could fluctuate from year to year, it will remain around that number, barring any unforeseen major setbacks. As you can see, this quarter, Tesla produced 479,700 cars. If they increase production 50% year over year for the next 3 years, they will be producing 719,550 cars in quarter 2 next year, 1,079,325 in Q2 the following year, and 1,618,987 cars in Q2 of 2026. If hypothetically they sold each vehicle at an average price of $30,000, by Q2 2026, they'd be at an annualized rate of $194.278 billion in revenue, and at a 12% operating margin, which is what they're at currently, that's $23,313,360,000 of net income. Now, if I was one of those people who only value Tesla as a car company, the video would just stop here. But Tesla's full self-driving software is really how they're going to print cash in the long run. In the previous estimate of $30,000 per vehicle, I have not included any full self-driving software subscription revenue. This means that the price of $30,000 is simply from people buying Tesla cars and having them delivered. When Teslas become autonomous, I expect the take rate of full self-driving service to be around 50%-ish. For Teslas that are already on the road, it costs $200 to subscribe for full self-driving software. And for new vehicles, it costs $15,000 to have the features permanently. I believe that through my personal experience driving FSD Beta, along with some research that I've done, Tesla will achieve full self-driving no later than Q1 2026. So by Q2 2026, according to Tesla's goal of 50% compound annual growth rate, which they have a track record of achieving, they will have 13,182,407 vehicles on the road. If 50% of them opted to pay for Tesla's full self-driving service, at $200 per month, Tesla would produce an additional $1.318 billion a month in income, which is $15.81 billion per year of income. And that is with what I believe is a conservative estimate, a low take rate with a low cost, because the cost will probably increase as Tesla's features improve. Take 13,182,407 vehicles times take rate of 0.6 times $250, and that is $1.97 billion per month of pure income added straight to the bottom line. This is $23.7 billion in pure net income added to the bottom line each year for Tesla. So add their software business profit to their car business profit, and the company is doing $47 billion in income by 2026. But hold up, because it gets even crazier. Because this model doesn't account for Tesla's energy business, which is growing rapidly and under the radar. It will not be long until Tesla's energy business matches the size of its vehicle business. As you can see, Tesla's energy business took a hit in Q1 2022, but this was due to supply chain constraints, which have since been alleviated, as you can see from the following quarters. In the first quarter of 2023, you can see a massive spike in energy deployment from 2.5 gigawatt hours in Q4 2022 to 3.9 gigawatt hours in Q1 2023. A 56% quarter-over-quarter increase and a 360% year-over-year increase. According to Tesla's most recent earnings call, they expect the profit margins for their energy business to grow to around 25% by the end of the year. This is something that I'll be having a close look at in the Q2 2023 earnings report because it could have a significant impact on my Tesla price target. Tesla's energy business was just shy of $1.53 billion in Q1 2023, a 158% increase year over year. Tesla says that the factory in California is ramping well and has room to go. You can tell that Tesla is eager to expand their energy business as they've already started their next factory in Shanghai, which they expect to be online in Q2 2024. It is safe to say that in the upcoming earnings report on July 19th, I'm going to have my magnifying glass over Tesla's energy numbers while the mainstream bozos stuff their faces in the vehicle profit margins. Tesla's energy business is difficult to model out, but given the fact that the Lathrop, California factory took a year to complete, and the Shanghai factory is expected to take 3 quarters to complete, Tesla's energy business should double again by Q2 2024 next year, double again the following year, and then grow again 70% the year after that, all because of new factories and expansions, which I wouldn't be surprised to see Tesla raise money to accomplish. So all that being said, by Q2 2026, the energy business would be doing $10.4 billion in revenue. And if they can achieve their stated goal of 25% margins, then they'd be producing $2.6 billion in quarterly profit, which is $10.4 billion annually. Add that to the software and car business, and Tesla as a whole will achieve an annual net income of approximately $57 billion, $441 million by Q2 2026. To put this in perspective, Apple, the largest company in the world by market cap, is currently at an annualized net income of $96.640 billion, according to their most recent quarterly earnings report. If Tesla were to be trading at the same price-to-earnings ratio Apple is today, 32, in Q2 2026, then Tesla would be worth $1.83 trillion, $580 per share, which is a 27% increase quarter over quarter for the next 3 years. That's not a bad return on investment to me. That being said, in 2026, the growth prospects for Tesla will be much greater than the current growth prospects are for Apple. Expect Tesla to continue to command a premium price-to-earnings ratio. Tesla will continue to expand their energy business after 2026, and the economic impacts of robo-taxis and Optimus Bot could be each talked about in a video of their own. If Tesla's trading at a price-to-earnings ratio of around 60, which is what I believe they will be trading at in 2026, the company will be worth $3.4 trillion, which is more than Apple is worth today, and they are the largest company in the world. That would make Tesla worth $1,088.98 per share. Even though I think the economic impacts of Optimus Bot and robo-taxis will be particularly enormous compared to the current scale of Tesla's business, I'm not going to talk about them in this video because they're not coming until way later down the line. Maybe I'll talk about them in 3 years when the Wall Street bozos get their heads out of Tesla's Q2 2023 profit margins in their vehicle business. Anyways, that's it for today's video. As always, this is not financial advice. I am not a financial advisor, but if you learned something new from this video, please consider subscribing and stay tuned for more. Peace!